Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing language of corporate filings, and today we have a company embracing a new direction. But is it a good one or just a name change? NAP Defense Incorporated, formerly Bliss Corp, has made a pivot from treasure hunting to defense systems, and their latest filing shows a company fighting to stay afloat while chasing a new dream. Let's dive in. This is an amended annual report for the year ending the 30th of April of 2025. Now, normally this would mean they are just adding some information or fixing a small mistake. But here, it seems they are adding the IBXRL data, which is a way to make these reports easier for computers to read, and fixing a tiny typo. Not exactly headline news, but it tells us they are trying to be more transparent, or at least follow the rules. So who is NAP Defense Inc. today? Well, they officially changed their name from Bliss Corp on the 1st of April of 2024 to reflect a new focus on defense and security. Think weapon systems, tactical gear like Cornershot, and technology for military and law enforcement. Their strategy is pretty clear. They want to develop and sell weapon systems, explore non-lethal solutions, research protective gear and technologies, and basically become a distributor for defense products, all while building partnerships and working with government and military clients. They are trying to acquire rights and intellectual property for the Cornershot system, a pretty neat gadget that lets you shoot around corners. This move happened through an agreement in March of 2024 with Native American Pride Constructors, LLC. This agreement was a big deal, involving a lot of shares for rights to sell and produce the Cornershot. They also got access to munitions brokering overseas, which sounds important, but also requires a lot of government approvals. Essentially, they are trying to buy their way into a new industry. And to make way for this new defense focus, they have officially shuttered their old treasure and shipwreck recovery business. So it is all defense all the time now. Now let's talk about the stock. You can find it traded on the pink sheets under the symbol Bleeze, and let me tell you, it has been a wild ride. You can see the stock price fluctuating quite a bit. For the year ending the 30th of April 2025, the stock price went from nearly 5 cents all the way down to 1/10 of a cent. That is a massive drop. They admit the trading volume is small and the stock is thinly traded, which means these price swings can happen for almost no reason. Investing in this stock, they say, is for those who do not require liquidity and can afford to lose their entire investment. That is a pretty strong warning right there. Let us look at the financial health of the company. They have been losing money since they started, and that trend continued strongly in 2025. The company recorded zero revenue in both 2025 and 2024. That is right, no sales, no income from operations. Instead, their operating expenses jumped dramatically from about $384,000 in 2024 to nearly $2.5 million in 2025. This massive increase is mainly due to higher general and administrative expenses. They mention an impairment expense of over $1.7 million, which sounds like they wrote off a lot of value from something they thought was worth something. And the net loss reflects all of this for the year ending the 30th of April 2025. The net loss was over $3.3 million compared to about $11,000 in the red the year before. So they are losing money much faster now. Looking at their balance sheet, their total assets are a meager $16,452. That is not a lot for a company trying to break into the defense industry. But their current liabilities, what they owe in the short term, are over $1.1 million. This means they have a big problem with liquidity, essentially not having enough cash to cover what they owe soon. They use nearly $800,000 in cash just to keep the lights on for their operations, and it looks like they are running out of cash fast, stating they expect available cash to run out in less than a month from the issuance date of these financial statements. To survive, they raised about $809,000 from financing activities. This was mostly through convertible notes, which means they are borrowing money that can be turned into stock later on. And the auditors flagged this, saying there is substantial doubt about the company's ability to continue as a going concern. This is a big red flag. It means they might not be around much longer unless they can secure significant funding very quickly. They have been authorized to issue up to 500 million shares of common stock. This gives them a lot of flexibility to issue more shares to raise cash, but it also means existing shareholders could see their ownership greatly diluted. We see a notable increase in common stock to be issued, going from around 687,000 shares in 2024 to over 1.1 million shares in 2025. This indicates they have made commitments to issue stock that has not yet been fully processed. Their accumulated deficit, which is essentially all the losses they have ever made piled up, is now over $8.4 million. That is a huge hole to dig themselves out of. The auditors, Salberg Civi Company PA, expressed serious concerns. They noted the net loss and the working capital deficit, directly stating these matters raise substantial doubt about the company's ability to continue as a going concern. They also mentioned that the company is not required to have an audit of internal control over financial reporting, which for a company this size and with these financial issues is frankly a bit worrying. And management agrees. They explicitly state that their internal control over financial reporting was not effective. They cite limited resources, lack of personnel, and insufficient segregation of duties. This means there are gaps in how they track and report their finances, increasing the risk of errors or even fraud going unnoticed. They plan to fix this by hiring more people and consultants when they get more capital. But right now it is a weakness. They have a lease agreement with a related party for office and warehouse space at a cost of $25,000 a month. This is quite a significant expense for a company with almost no revenue. Let's look at their debt. They have a lot of convertible notes payable, meaning debt that can be turned into stock. Many of these have issues. For example, several are in default due to non-payment of principal and interest. They have unamortized discounts of over $263,000. This essentially means they borrowed money for less than its face value, often to incentivize lenders, which adds to the overall complexity and cost of their debt. There have been changes in officers and directors starting in March of 2024. Edward K. West is now the CEO and John Spence is the CFO. They seem to be building a new team to drive this defense business forward. The company is essentially burning through cash at an accelerated rate in 2025, with operating expenses nearly 7 times higher than the previous year, while bringing in absolutely no revenue. The impairment of intellectual property valued at over $1.6 million to zero in 2025 shows a complete write-off of their investment in the Cornershot technology based on a lack of sales. That hurts. Now for our take, NAPC Defense Incorporated is making a bold pivot into the defense industry, which can be lucrative but also highly competitive and heavily regulated. Their strategy to acquire rights and intellectual property for systems like Cornershot is interesting, but the execution so far is extremely concerning. They are bleeding cash with zero revenue, their stock is highly volatile and risky, and their internal controls are weak. The auditors are clearly worried about their survival. While the new business focus has potential, the financial reality paints a grim picture of a company struggling to survive. They desperately need significant funding and a clear path to revenue generation, which they currently lack. The significant impairment of their intellectual property is a strong signal that their initial foray into defense has not met expectations. The company is essentially betting its survival on this new defense venture, but right now, the odds do not look good. What is your take on NAPC Defense Incorporated's new direction? Do you think they can turn this around or is it too late? Let us know in the comments below. If you found this deep dive valuable, please hit that like button, that really helps us out. And make sure you subscribe so you do not miss our next corporate deep dive. Also, we have built an amazing community on Discord where we discuss these filings in real time. So check out the link in the description. Thanks for watching. See you next time.